Hello, everybody. Welcome to today's Trade Smart Tuesday. Today, we are going to be talking about stage analysis. What is it? How to use it? How it can help you save time, save money, and save a lot of effort too. Because if you're focused on stocks that are in these stage two uptrends, then it's something that's going to help you to be in stocks when they're most likely to make their biggest moves. Now, before we get into what it is and how to use it and everything, I wanna share a little bit of background for you on stage two and or stage analysis in general, and well, why you should even be listening to any of this. So, a few things. The godfather of stage analysis is this guy right here, Stan Weinstein. He wrote this book called Secrets for Profiting in Bull and Bear Markets. So if you've read this, type into the chat, let me know. If you haven't read this one, then I think that you should read this. So first thing we're going through here is going to be a little bit of homework for you guys. So Stan Weinstein's Secrets for Profiting in Bull and Bear Markets. By the way, you'll be able to use this stuff. You'll be able to use stage analysis by the time we're done. We're going to have time for Q&A, but I want to give you some background and some additional reading for those of you that are interested. So Stan Weinstein's Secrets for Profiting in Bull and Bear Markets. That's an excellent one. Next one, Mark Minervini's book, Think and Trade Like a Champion. He talks about stage analysis in his work too. He actually refines it, takes it to another level. So you definitely want to read Mark Minervini's book. You could see how much that one got flagged. Next, if you have not read William O'Neill's book, How to Make Money in Stocks, this is a must for anybody that's trading growth stocks. O'Neill doesn't talk about stage analysis, but it's going to come in very, very handy when we get into the charts. You'll see why in a minute. And a big part of what helped me understand this stuff even more was this right here. Chart School. Investors Business Daily has this course called Chart School. Aside from having a model book of stocks in here, part of what the guys that taught this, it was taught by Mike Webster and Charles Harris. Both of these guys are William O'Neill portfolio managers back in the day when O'Neill was still alive. And they taught this workshop. Well, one of the things that they taught in this workshop was understanding a stock's character and when and how that character starts to change. So even though it's not explicitly stated in Weinstein's work, it's something that I found useful in applying to stage analysis. And so that's why I'm sharing it with you guys. Let me see. Well, looks like Caleb had a question already. Well, what version of How to Make Money in Stocks is that? Mine is orange. Yeah, I think the green one came out after the orange one. Not sure what the difference is. This one has a CD. You remember those? But it's all basically the same stuff in here from how memory serves. I remember a bunch of people back in the IBD meetups. So, quick story: Investors Business Daily has these meetups all around the country, and I started attending one back. God, it's got to be about 15 years ago that I went to my first meetup, and the guys there, everybody was reading How to Make Money in Stocks. Some people had the green version, some people had the orange version. I actually think I had the orange version. I gave it away to somebody, and then I had to buy it again because I never got that copy back. So that's how I ended up with the green version. But anyhow, both of them are good. All right. So Stage analysis. Let's get into stage analysis. So, stage analysis, let me share the screen here. And this is, some of you might recognize this. If you're in our Discord for the Mara coaching program, then you're probably familiar with this because one of our members and a couple of our members shared the video that this came from. There's a great video by Stan Weinstein and Richard Moglen. They were analyzing DraftKings and they were analyzing this chart and they were going through step by step of, okay, well, here's how the stage one, stage two, stage three. So why rehash this stuff again? Well, we're going to pick out some of the nuances in this talk that maybe weren't discussed then, and maybe we'll pick up a couple of other things here as well, because we're going through not just Weinstein's work, but we're also going through O'Neill, Minervini, and the rest of the IBD work. So let's go through it. All right. So what is stage one, two, and three? And well, what is a stage analysis? So stage analysis is basically showing us when there's an accumulation phase, right? So down here, right, when price is moving sideways, that's your basic accumulation phase of the stock. Then, well, once price starts to break out of this and starts to head up, you're in the now you're in the uptrend phase. Next, you have your distribution phase where price is moving sideways, and then you could move back into stage two, stage three, and then, well, when you're finally ready to roll over, you're into stage four. So, well, what's the big difference between these, and why did I draw these lines here? The difference with this stuff and how to use it, there's a couple of key things here. And actually, let me take off some of these other moving averages so that way maybe it's even a little bit clearer. There's two key moving averages when we're thinking of stage analysis. There's the 50-day moving average, that red line, and the 200-day moving average, that black line. So when price is just basing like this, where it's moving sideways and you're above the moving average, you're below the moving average, you're above it, you're below it, and the line is moving flat like this, that's your stage one area. When the moving average starts to turn up like this and price is above it, that's your stage two. And the reason why you want to be interested in stage two is because that's when the momentum is on your side. So price can be trending up when you're in stage two. Price could also consolidate and get ready for its next leg up, also in stage two. So you see over here where price is running up, and then it starts to consolidate over here and it pulls back. And now it's below the 50-day moving average. That doesn't mean that all of a sudden it's stage three. You're still in stage two at that point because because the 50-day moving average is still moving up. It's not until you get over here that maybe you're transitioning into stage three and roll over. You don't know yet. You only know what's exactly in front of you at any point in time. So as price is consolidating, when you're in stage two, and sometimes even when you're in stage three, right? So again, here's stage one, right? So let's call this stage one. When you're up like this, that's definitely stage two. Over here, you're starting to question whether this is stage three, right? Because price is starting to move sideways. You're above the moving average, you're below the moving average. Now the moving average is starting to roll over a little bit, but you want to pay attention. And this is where the IBD stuff and the Minervini stuff comes really in handy. And the reason why is because you're not just paying attention to the overall price action or which way the moving averages are going, you're also taking a very close look at the behavior of the price action. So we zoom in a bit here. Let's get that out of the way. So zoom in a bit and let's make this a little bit bigger here. Okay, so over here, let's make this a different color. Let's make this, can I make it a different color? I thought that I could, but I guess not. All right, doesn't matter. All right, so let's say that we're looking at this and we notice that, hey, price had this consolidation area right here. And we're just looking at the whole chart at this point. It's like, oh, you know what? It contracted again. And then it contracted a third time as it's moving sideways over here. Do you notice how price is getting tighter and tighter and tighter as it moves towards this side of the chart? That's an important thing to start to pay attention to, because that's something that gives us opportunity. Not only does it give us opportunity, it also gives us low risk, because when price is tightening up and tightening up and tightening up, it gives us an area where we could say, all right, you know what? If price breaks above this, then I'll be in. And if it falls below this, then I'm out. Right? It helps you to define what your risk is going to be. And you also know that you could be transitioning back into a stage 2 uptrend. Right? Because that's what we want. We know that stage 2 is where the big moves happen. So that's why we want to pay attention to the different stages. A question that comes up frequently is, well, does it have to happen in order, right? Do you always get stage 1, 2, 3, 4? No. Sometimes you get stage 1, stage 2, stage 3, and then from stage 3, you could transition back into stage 2, or you could begin stage 4. It took me a while to understand that, right? So sometimes you might just think of it as, okay, is price moving up, down, or sideways? Right? That's another way to think about it. But well, with the stage analysis part, right? Because we don't want to get lazy, we want to remember that the moving averages count. Right? Because how is the price moving around these key moving averages? Because if they're getting wide and loose and sloppy, then you're probably later in the move. You're probably getting a lot closer to the end of stage 3, beginning of stage 4. If you're earlier in the move, you might transition into from stage 2 to stage 3 like this, and then you could come back out of it like you did over here. Yes, price broke out and then it pulled back and then it broke out and then it pulled back, and you're in this herky-jerky kind of environment. Not too dissimilar from where we're at now. Take a look at that chart. What date are we at? I don't know if you could see that, but this is September. This is September of 2020. September is generally a very choppy period in the market, so it's not going to be uncommon to see this kind of action. So will you be a holder if you bought here and price pulls back in, and then price rallies, and then price pulls back in again like that? Will you be a holder? Well, if you have rules for when to hold or how to hold, becomes a heck of a lot easier to hold through that kind of stuff. If you have a rule that says that, okay, I've got a stop loss and my line in the sand is down here and I know exactly where I'm going to sell, that that's something that can help make your life a lot easier. If you already know exactly under what price you're going to sell, if price falls below X, that's where I'm a seller, makes things a lot easier. Let's continue. So price breaks out. Price breaks out, price runs, price pulls back. Then, right, when price breaks out, pulls back to this, now all of a sudden we're in this difficult area, right? 3 tends to be a difficult area. Why is it difficult? Take a look at the price action over here. Take a look at this price action versus this price action. This is a little bit more advanced than what we were talking about a moment ago, but hopefully you're following along. If you do have questions, please. Whoops. That's, I don't know what happened there. Hit a wrong button. Okay, back in business. So here is DraftKings. So the difference between this move here and that move there, there's a couple of different things that you might catch. The first thing, what's the depth of this versus the depth of this? Let's take a measurement and see. This is 38.5% deep. This is almost 45% deep, significantly deeper. So the action over here is getting significantly more wide and loose than the action back here. Also note the time spent below the 50-day moving average on that drop versus this drop over here. Look at the bars themselves. Look at this action and this action versus this action. Do you notice that this is tighter than this? You have action where not only is that a more of a severe drop, but you have a little bit of a run up back here. It starts to get a little bit tighter, right? So let's draw that out. You get a little bit tighter over here, but then you get looser again. Do you see that? So what does all that mean? That means that you're going through a bit of a character change. And how is that significant? So when a stock's character changes, when it's been tight and controlled, and then all of a sudden it starts to get wide and loose, that's something that tells us that, hey, you know what, the stock could be under distribution, which means that there's more selling that's coming in. Now, price did run up a bit more, right? So just because price action gets wide and loose, that doesn't necessarily mean that price is immediately going to start falling. But what it does mean is that you're getting some pretty wild action in here. Some action that's going to be a lot more difficult to trade. Right. So, well, part of what I'm looking for are the easier trades, the trades where risk is nice, tight, and defined, and I'm able to figure out what my entry point's going to be, what my stop is going to be. It's very clear on the chart. I could see it. I could also figure out what my reward to risk is going to be, and from there, I can figure out how much money I'm going to pump into this thing. Because that's one of the big things that we're trying to figure out, right? We're trying to figure out how much of our money do we want to put at risk in this idea. and how much are we willing to risk if we're wrong, and how much could we do we hope to make if we're right. But the one of the big things, this is something that if you're watching this now, you should really take note of. You want to know how much you stand to lose if this doesn't work out. You always want to approach trades risk first. Every trade that you put on has a certain cost associated with it. I like using business analogies. So every trade that you put on has a certain cost associated with it. What you put on, the difference between your entry price and where you're going to place your stop. So in this case, back here, if I'm entering here and my stop is down there, that's the difference between those two spots is what this costs for me to see, will this work or won't it work? So over here, if I were to trade this, right? Let's say I wanted to get in here and say, well, you know what? It sort of looks like it did before. Let's place my stop down there. Well, guess what? I would have been taken out over here. I wouldn't have taken that trade because for a variety of reasons, but that would be the distance between where you enter and where your stop is. Now, one of the things that came up in conversation with one of our members was to talk about the transition or the nuances between when you're getting into stage 3 and stage 4. And what's the difference between stage 3 and stage 4? Well, over here, this whole section could potentially be considered stage 3. As you see price move up and down and up and down, and price is really all over the place, but you don't have to wait for price to completely roll over in order to get out of it, right? But there's plenty of other ways that you could start to get out of this trade before stage 4 starts. And you know what? It's really in stage 4 that you want to start thinking about shorting. Not before. If you're somebody that's shorting, you want to wait until you're in stage 4 versus stage 3. And here's why. You see how herky jerky the action is and how shorts could get run? That's one of the reasons why you want to avoid shorting when you're in stage 3, because who knows when and where the snapback rally is going to occur. You're far more likely to be successful shorting when a stock is in stage 4. So how do you know when a stock is in stage 4? It's trading below the moving averages, and the moving averages start to roll over, and you start to break below support. That's how you know that you're in stage 4. So where's stage 4 on this chart? You're definitely in stage 4 down here. And you could see how far and how long you could stay in stage 4. And here's something else about stage 4, and Stan mentioned this in his presentation with Richard Moglen. One of the things that happens in stage 4 is that you start to find resistance at the moving average instead of support like you did at stage 2, right? So when you're in stage 4, price is falling rapidly. It's not going to fall forever, but when price does rally back up, it starts to find resistance at the moving average. That's one of the big differences. Now you're trading below the moving average, and now you're finding resistance at it. Whereas when you're in stage 2, you're trading above the moving average and you find support on or around it. That's one of the big differences there. So we spoke a lot about stage analysis. I'm curious to hear what sort of questions you guys have, if you have any questions at all about any of this stuff so far. But I do want to talk about how Deep View has helped made it a lot easier to figure out, well, what stage is the stock in right now, and also uh, how I'm using stage analysis to help me figure out, well, how strong or weak is the current market environment. So go ahead, type into the chat. Let me know what questions you guys have. And here's one way that Deep View can help you with stage analysis. So if you come over to this button right here, they've got this data panel. You pop that out, wait for it to load. You refresh the page, see if that helps. Yeah, there you go. Let's get DraftKings up. And what do I've got the stage analysis on here? Yeah, right here. So right now, it's telling us that this is in stage 4. Something else that's pretty cool, right? Because you have it in the data panel, but when I'm running my screens and building my watch lists, one of the things that I like to do is take a look at, after I've run my screens, I build, well, what I call a universe list. It's all the stocks that I'm potentially interested in that fit my criteria. I'll come over to here and I will sort the list. Excuse me. I'll sort this list by stage analysis. And so, real quick, I could see, wow, there's all these stocks that are in stage 2. And then I could click on this, click on the last one, and then I could see, wow, I've got 183 stocks of the 287 stocks in my universe that are in stage 2. So immediately I know I've got a good chunk of stocks in my universe that are in uptrends. Isn't that cool? Here's something else that's even cooler. So one of the things that I like to do is to track. I track a lot of stuff, as you can see. But one of the things that I like to do is to track how many stocks are in a stage 2 uptrend in my own universe. So that way, it gives me a real good sense of, okay, are things getting better or worse? And I get a real time feel of that. And I could go back and look in time and see, well, how were things in this cycle? How were things in that cycle? And it gives me a much more tangible feel. Just from taking a quick peek at, well, how many stocks are there in stage 2 uptrends? Because if there's a lot of stocks in stage 2 uptrends, it's probably a good time to go shopping. But if there's not, then it's probably not. So those are some of the things that I look at. So for those of you that are interested in checking out Deep View, I put a link in the description, but I'll post a link in the chat for those of you that are want to check out the screener here. Let me put this into the chat. Let me know what questions you guys have. Yeah, there's the link for Deep View. I think that they're running a special right now, that normally they do something around the holidays, so they might still be they might have something going on for Labor Day. Go check it out, click that link. As far as our research program goes, oh, we're doing a free 2-week trial. So if you want to check out the Mara research program, where you're going to get my thoughts and analysis and trading plans, you could get a free 2-week trial to that. There's a link in the description as well. And I also just posted the link in the chat. So go check that out. So are there any questions? Any questions you guys have? I'll leave the chat open for one more minute here. Otherwise, we'll call it a wrap. All right, so it looks like that's it. So I'd like to thank you all for joining me today. I hope that you're leaving with a better understanding of stage analysis from Stan Weinstein, from some of the perspectives that were found in Stan's book, Mark Minervini's book, some of what is discussed in How to Make Money in Stocks, some of what's discussed in Chart School from Investors Business Daily, and from some of my own personal experience of having traded well with all this stuff for well over a decade. So, um, yeah, that's it for today. So, I want to say thank you all so much for being here. It's been great, and I'll see you next time. Take care, much love, and God bless.